the best practices for managing your finances during a flip project or a long-term rental project, so I'll touch on flips first, is that for flips, we want to make sure we're really tracking those rehab expenses real time. So at the start of your flip, you're going to book your purchase closing statement immediately. And then from there on, the bulk of the work is going towards tracking your rehab expenses. So we want to track those at a level that it's useful. So you're going to have maybe your plumbing expenses and your electrical expenses and your holding costs all broken out so that you can be reviewing that very consistently, and you know exactly what you're spending your money on. And if you need to have a difficult conversation with the contractor, you can do that real time rather than, months down the road when it's no longer as applicable. And then for long-term rentals, as far as tracking your finances, you want to make sure you're really tracking kind of those monthly ins and outs. So you want to make sure you're receiving your rent every month. You want to see where your money's going. So when we create that initial template when we're buying a property, we're usually using standard, this is how much I'm going to spend on insurance, this is what I'm going to spend on property tax. But once you actually own the property, it's really important to be looking at what you're actually spending your money on. Are you spending a lot more on repairs and maintenance than you expected? Should some of those repairs and maintenance things be capitalized and then, further depreciated with your tax CPA? So it's really understanding where your money's going for long-term rentals as well.